This is not a financial advice. I'm not a financial advisor. You know the deal. All right. So today's video, we are going to be going over how do you know when price is going to stop and not to short. Okay. And I feel like a lot of people probably struggled with this today, right? You can see, I'm sure many of you tried shorting something up here. Okay. To me, I've been doing this quite a while. I see zero short setups in this pump here. Okay. I don't even see any potential for short setups that fail. I see zero short setups. There's no short setups, okay? So first thing I want to go over, I'm just going to go in the replay mode. When we came into this, right, I see one thing. I see manipulation, news, the news data wake up into this fair value gap. So at the time, I am not sure at this time whether we are going to go like this or go up, and this is kind of where I gauge my bias. But if you look at the 15-minute time frame here, I saw one thing. I see 15-minute fair value gap and an order blocks down here. Okay, so ideally, I don't have a bias here. My bias is okay if these hold, I'm bullish, but it's not like I'm saying okay I'm bullish here, because we could have very easily gone through this. So this is where I just kind of stay out. I kind of see what price action wants to do, right? And in this, you guys know I have a rule. I never short with equal highs above, okay? Doesn't this look like a perfect short? I would say so, okay? But we have equal highs above we made yesterday, okay? And I can't short with equal highs above. It's just against the rule. And this was an hourly order block, and it was a reclaimed order block, right? So, breaker. So, you can see it was really against the rules to short this morning. And I'm going to show you guys a tweet real quick, okay, to prove I actually said this morning. Okay, I don't want you guys thinking this is all hindsight. Give me 1 second. Okay, so it was on Sir Pickles. If you guys know Sir Pickles, shout out to him. Okay, so right here. So he tweets this. He goes, my bias for today's bearish, and I said, me too, but against her rules, just short with equal highs above, so probably won't take anything. So I always wanted to do this, but there's equal highs above. Do you really think I'm going to short with equal highs up there? Probably not. Okay? And that's I don't short with equal highs above. You really can't. They fail too many times. These very value gaps with equal highs above fail way too many times to short with equal highs above. Okay? So if I go back to the 15-minute, all right, and I play open, I see one thing. I see we hold this fair value gap open. Okay, and what do I say about whenever we get momentum off a fair value gap, where's usually the draw? The draw is the next high. So ideally, before we actually get this candle, I'm still not really sure where the draw is. I'm not long in this, but I'm not totally sure the draw's up here yet, because I want to see nice momentum through this. Okay, this is how my win rate's so high. I wait till like the confirmation setup. I don't really. Yes, I could have taken this, but I'm also risking buying into a premium fair value gap. Okay, which can definitely lower the probability of a trade, right? And you can actually see I passed my Apex whatever today, so I forgot I was on this. But anyways, you can see on this, right? I'm not totally sure, but then what do I see? As soon as we get these two candles right here, immediately when we get these two candles, even this third candle, I'm like, okay, we are smashing through this 15-minute fair value gap, right? You can see us clearly smashing through this 15-minute fair value gap. So this is a SIBI, and when we close above this, you want to see this use as support. So anywhere inside here, I will look to long, because one, I see equal highs above, and two, this is a lot of momentum. Again, where do we know where price usually stops? Usually equal highs, equal lows, right? So the title of this video is how do you know where price stops, which I'm gonna get to in a second, right? Okay, so right here, as soon as I see momentum above this fair value gap, the draw should be the next high. Again, there's two things supporting it. One, we break above this bearish fair value gap, and two, we've triple equal highs above. Okay. Makes for a really nice setup to get us up to those highs, right? So if we go back in the 5-minute, you can kind of see there's a smaller fair value gap within the bigger fair value gap, right? So ideally anywhere off this would be a nice long. Okay. And you can see we hold it nicely. And we actually did get some equal lows beneath here. So like right here, okay, I'm going to say something. So what if we got something like this? Okay. We got something like this. Let's say I'm gonna make these a little lighter for you guys. Let's say we got something like this, which I wanted. What if we got this, and there's a fair value gap and premium up here, and there's a fair value gap premium. What do you short this? Okay, well technically this would be the market structure shift. Okay. Ideally, because we at triple equal highs above, this would be a fake market structure shift, and I made a Twitter post about this. So ideally, this would be a fake market structure shift, and because we have these equal highs above, even if this works, this would not be something I would take, right? Any market structure shifts I see, no matter if it was the 15-second time frame here, the 5-second, even the 1 second, I'm not taking any shorts because I know buy side is above, so I know there's a chance that this is going to be fake. Okay, and did we actually ever get this? No, we did not. You can see we kind of got a nice down move here, okay, with a fair value gap. If you look right here, right, we got a nice down move there, fair value gap. What happens? We just totally run through that fair value gap, and although we had equal lows below, okay, I know at the end of the day, the draw, the buy side of the curve is going to be right here. So whether we go like this, which would have been a better risk reward for long, whether we go like this, or we go like this, which I called on my Twitter, we'd actually hit these equal highs, okay? So if you look at my Twitter, I call that. I don't care if these are hit or not. My main primary draw is these, okay? Although it would be nice to sweep these and then go back up, it's not necessary, but it would definitely make for a better risk reward and better long setup. And again, because we were already so close here, I wasn't really expecting a giant Judo swing down. It also depends on timing. Okay, we got so close to this after the macro time. Okay, you can see lunch starts at 12 o'clock. So if we were at 12 o'clock and still done here, I would have expected a Judo swing. But we were already so close to this buy side, and we just hit lunch, so there was like no way I thought we were gonna come back down here, right? So we ended up putting this, and this is where I told people, I'm like, okay, now look for shorts, okay? And this is where people struggle, because if I had to guess, I would guess, okay, price is going to stop here. But do I know that? No, I do not. So to determine how price is really going to stop is you wait till a short setup, right? And on the 5-minute time frame, these are very apparent. On the 15-minute time frame, these are also very apparent. So am I really going to wait for a 1-minute time frame shift because these equal highs are so significant on the higher time frames? Likely not. I'm going to wait for a 5-minute time frame shift, okay? Not a 1 minute, because these were so obvious in the 5-minute as well, which I really would wait here. And this is where also you got to realize there's a obvious high here, there's an obvious high here, right? So here's where you kind of guess where pricing is going to stop. And I based it all off the momentum we get to the highs and lows. So what do I see here? High momentum through these equal highs, right? We get very, very high momentum, which means would I long this? No, it would not. Okay, I'm not longing this. Even though this does work, I'm not longing this because I see we already hit the equal high. So I'm not longing this. I'm not interested. Okay, I'm just waiting for a short setup from now. And for me to really think, okay, price is going to stop here and then go down is when we start disrespecting these bullish PD arrays. So this bullish fair value gap would be an example of a bullish PD array. If we knife through this and then use this as resistance, that's when I would be like, okay, 5-minute time frame, just dump through a 5-minute bullish PD array. And let's say we barely break over this high, which you can see we barely break over this high. Although we did go through these equal highs with a lot of momentum, we barely went through this high. So the setup here would have been, okay, if we did get a nice dump through this, I would have been bearish. But did we respect this bullish PD array? Yes, we did. Would I have long this bullish PD array? No, no, I would not have, because it's too high. Okay, there's still too much momentum to long here. Okay, and then same thing. All up here, okay? There's zero source setups to see. The momentum is still to the upside. Now my primary focus is this fair value gap, right? Because it's a discount. So ideally, as long as we hold this fair value gap, I'm still bullish till this high, right? Nothing here is telling me to short. We have no market structure shift. We have no breaker structure. Nothing here is telling me to short. So if I keep playing it, okay, look right here. We get a tiny, I guess you could argue this is a tiny, tiny volume imbalance. Okay, what happens? We reject it and we go down a little bit. But this is the 1 minute time frame. What are we really going down to in the higher time frame? We're really just going down to a bullish PD array, right? So is this really something you want to short? All this is 15-minute fair value gap, right? And there's still a lot of momentum to the upside. Yep. So there's no really knife through any of these nice bullish fair value gaps, right? There was, like, I totally get there is a knife through here which you could have shorted. I know someone actually did short this for 50% options, which is kind of crazy. Okay, first of all, there is triple equal highs here, so that's the first red flag. Okay, get this worked for a little bit, but again, on the higher time frame, because these highs are so significant on the higher time frame and we still have a lot of momentum through them, I'm still ultimately bullish here. Okay, you really want to be on the time frame. You have the highs, you can see the eyes the easiest on, and wait for that time frame to have a market structure shift instead of trying to go to the 15-second every time. And right here, there's zero short setups. Okay, I guess you could argue, like, right here. Okay, this is a short setup, right? But at this point, we're so close to buy side. Would you really short this? Probably not. Okay, same with right here. Would you short this? Probably not. Because of how close we are at this point, I honestly probably just wait until we hit buy side. Okay. If somehow later in the future we came crashing down off of here and went way down here and I saw, okay, maybe this is an SMT, okay, right? Then I would short. But for now, I'd really wait until we hit this high and then I would short. I am bearish going into the next week or so. Okay, I really think we reject somewhere here. I'm surprised it wasn't up here. But again, was there any really short setup? No, because these highs were so apparent in the 15-minute, the 5-minute, I'm really not waiting for a 1 minute market structure shift. I'm waiting for a lower or a higher time frame market structure shift. Okay, so that is really when you know price is going to stop. Okay, you really just want to see the momentum we get over highs and lows. Okay, like let's see, right here, right? Is there a lot of momentum over these highs? No, there's not. You get one green candle. It doesn't even break the high that broke it, and then you get 1, 2, 3 red candles, and we just dip back below it, right? Same thing with this. Okay, we get no momentum going to this high. Okay, what is that no momentum going to this high tell me? That tells me you're probably going back down. But to this high, we got a lot of momentum. So ideally, this is where you would kind of guess, okay, price is probably not going to stop for a while until we get a nice wick over, so something like this, and then red candles, right? But the moment you see us like go through a high momentum, that likely means we're probably going to go a little higher. And then from there, you don't know where price is going to stop. You're just going to wait until you get a short setup, and that's when you're going to know price should start going back down again, okay? We're not trying to guess when price is going to stop. We're just waiting for the model to short. If we don't get it, that's fine. Same thing with like YM. The draw on YM was this all day, right? Okay, was there any, the higher time frame, was there any bullish PD array being disrespected here? Nope. Okay, this 5-minute order block supported. We stay above this 5-minute order block and we stay above this 5-minute order block. So the whole time, every bullish PD array is being supported here. So that's kind of how you know, okay? And even right here, there's a lot of momentum going over this high. So if you see the momentum going over this high, do you really think price is likely to stop? Probably not, okay? Until I see some kind of knifey candle back below this high, then I'm like, okay, maybe now we'll go down and hit sell side, right? So that is ultimately when you kind of know. Again, this kind of has to do with drawing liquidity a bit and learning momentum and what I kind of said in my video, right? But hope you guys enjoyed this video. Let me know if you have any questions about it. And other than that, peace out.